Since my last portfolio update, I've invested over $6,000 in new stocks. The majority of this was invested in my top two holdings, Disney and AT&T. I bought the dip on both these stocks as their prices declined over the last month. So throughout this video, I'm going to explain the 4 stocks I bought, while also giving you an update on the overall progress of my long-term dividend stock portfolio. My name is Zach, and you should leave a like and subscribe to the channel if you enjoyed the video. My current portfolio value is $98,833, which is a 25.66% total return on dollars invested. I was actually at a 30.78% total return last portfolio update, but my top 2 holdings saw a significant decline over the last month. We can see that the Walt Disney Company has now grown to be my largest position at $13,889. It's currently down 2.21%, with my cost per share being $154.38. AT&T is my second largest holding, valued at $11,540. This is down 12%, and my cost per share is sitting at $27.49. We'll talk about both of these stocks later, since they were my 2 largest buys. My next 3 largest stocks have been performing very well. ExxonMobil is up 64.35% and continues to pay significant dividends. Apple is up 41% and has been on a nice rally over the past month. I'd love to add to my Apple position, but I think there will be better buying opportunities in 2022. I say this because their business has had such massive growth. Their free cash flow per share increased by over 30% in both 2020 and 2021. I think over the next year or 2, this growth rate will slightly decline. There could be less people upgrading devices or supply chain production constraints. I do think this will be a short-term slowing of growth, but could cause a stock price correction enough for a good buying opportunity. This is my intuition, but who knows? I could be wrong and adjust. I'm definitely a buyer long term. Microsoft is up 36.25%, and this is another stock I'll be looking to pick up much more over the long term. Kimberly-Clark is up 7.2%. Walgreens is up 8.5%, and MO is up 8.7%. Federal Realty is up over 81% and continues to be a long-term hold for me. Kroger is up 26.34% and is one that I'm looking to buy on any significant dip. 3M is up 24.71% and has fallen over the past few months to a point where I may look into buying more. Let's look at my overall diversification. Consumer defensive is my largest sector, which includes Kimberly-Clark, Altria, Kroger, PepsiCo, Smuckers, and Coca-Cola. Consumer cyclical has grown to my second largest, with Disney and a little McDonald's. This is followed by technology with Apple and Microsoft, energy with Exxon, EPD, and Chevron, then communication services with AT&T. Alright, let's take a look at my dividend income. In total, I've earned $3,925 in dividends, with $2,440 so far in 2021. Last month, I earned $272.62, which puts my 3-month rolling average at $257.97. So far in December, I've earned $44.57. This was from Johnson & Johnson, Smuckers, and Kroger. However, I'm about to earn some huge dividends over the coming week. On the 9th, I'll get $13.69 from Microsoft. The 10th is a giant day. $26 from Chevron, $7.81 from Scotts Miracle-Gro, $57 from Walgreens, and $131 from ExxonMobil. On December 12th, I'll get $28 from 3M. On the 15th, I'll get $12 from Coca-Cola, $9.94 from McDonald's, and $5.23 from O. By the end of December, it should be my largest month of dividends since the creation of my portfolio. Now let's get to the topic of the day, the 4 stocks I've been buying. Number 1 is Disney. I bought 29 shares at an average cost of $153.50. The stock had fallen over 15% from the release of their Q4 earnings, hitting a low of $142. This was nearly 30% down from their 52-week high. I used this as a buying opportunity and continued buying into the stock as it went down. In their Q4 earnings, they missed analyst estimates for earnings, revenue, and Disney Plus subscribers. Personally, I think this is not indicative of any significant trends, and I'm very bullish on the stock long term. I made an entire video where I explain this thesis in depth. It's called The Fall of Disney Stock, and I'd say it's one of my best researched videos. So definitely check that out if you're interested. Number 2 is AT&T. I bought 40 shares at an average cost of $23.23. AT&T just continues to fall and fall. I have no idea where the bottom is. Since the Warner Media and Discovery deal was announced back in May, the stock has fallen nearly 30%. The company is now valued at 6.5 times free cash flow over the trailing 12 months. This is getting crazy. It's hard for me to assign logical reasons for continued selling around the current valuation. But then again, who knows? I'm just going to keep collecting and reinvesting dividends. I'll buy more if it continues to fall. As a side note, I want to talk about how it feels when one of your largest investments is negative like AT&T is for me. I kept buying as the stock price continued to fall. All of my logic was telling me the stock is dramatically undervalued. As it continued to fall, I began to worry about allocating so much of my portfolio into a company that I don't view as top tier quality. The more I thought about this, I remembered that I was actually in a similar situation last October. This was with ExxonMobil. At that time, it was my largest position in my portfolio, and I bought all the way down to the bottom. In the end, I lowered my cost per share to $40.91. However, that position was negative by nearly 20% as ExxonMobil hit a low of $32.62. Today, ExxonMobil is one of my best performing investments. I'm not saying that AT&T will have the same outcome as the two stocks declined for different reasons, but the psychology is similar. It comes down to the old saying, buy when there's blood in the streets, even if the blood is your own. I continue to believe that AT&T is undervalued, and sometime after the Warner Media deal goes through in 2022, reality will return to the two stocks. I have an entire playlist of in-depth videos on AT&T stock, which is linked here. The third stock I bought was MO, or Altria Group. I purchased 17 shares at an average cost of $44.01. This will provide me an 8.18% dividend yield on cost and generate $61.20 annually. Altria is a cash flow machine and has increased its dividend payouts for 56 consecutive years. I think this is a rock-solid company to have in a long-term dividend stock portfolio. Not to mention the potential of federal cannabis legalization, which could be a giant positive catalyst for the company. I did a stock review video on this, so check that out if you're interested. I'll continue to buy more MO on dips. Finally, I bought 2 shares of Walgreens Boots Alliance at an average cost of $45.50, giving me a 4.2% dividend yield on cost. This was a minor addition, but the stock dipped to around my cost. This stock has a 10.24% free cash flow yield and has been increasing its dividends for over 45 consecutive years. The company is in the middle of an interesting transition. They are investing heavily into adding primary care to its pharmacies through their investment in VillageMD. They are also making heavy investments in improving their business through technology. I made a stock review video on WBA, which you should check out for more info. Alright, so those are all of the stocks I bought. As a bit of a bonus stock, I've been very interested in Visa as a potential investment. The stock recently hit its 52-week low, but has rebounded the past few days. I may look at this and do a stock review video in the future. Leave a comment if you want to see that. Thank you for watching Dividend Data. I'd greatly appreciate if you could leave a like and subscribe to the channel. If you follow me on Twitter, link in the description, you can get real-time updates of my buys and dividends coming in. You can support the channel over on Patreon, where you can gain access to a community Discord server. The link is in the description. Please leave a comment below, and thank you for watching.